Your loan to value dictates your mortgage. It dictates your rates, your deposit, and your monthly payment. And getting it wrong could cost you thousands in interest and even result in a decline from a lender. Hi, I'm Jenny from Your Mortgage Hub, and I'm here to help those starting out or starting over with their mortgage applications by showing you what you should and shouldn't be doing when it comes to applying for a mortgage. So what is your loan to value? Your loan to value is about how much mortgage you've got against your property value. The higher the loan to value, the lower the deposit amounts needed. Now, recently I had a client who come to me who was adamant they wanted a 10% deposit. Looking at their credit file, I kind of knew this may not be possible. And it was a bit of a balance between how much deposit they wanted to put down and what they could achieve mortgage-wise. So after some discussions with some lenders and looking at some affordability, we basically had two main options. The first one was we have the 10% deposit, but the interest rates were a lot higher. The second option we had was we had a 13% deposit where the interest rates were a lot lower, but it meant they had to put a little bit more deposit towards that. And that's all to do with the credit file and how the lender views it. After a really detailed conversation about what they were looking for the future, we went for the 13% deposit as it gave us the lower interest rate, but it still met the needs of what my client wanted to do. I'm really pleased to say that's now at offer. It's going through the process and hopefully they should complete an exchange shortly. So here are three things you need to consider if you're looking for a mortgage when it comes to your loan to value. Number one, your credit file will dictate your loan to value. So if you've got a poor credit file, it may be that you need a lower loan to value and therefore a higher deposit amount. But that's not to say that if you've got historic CCJs and defaults, you can still achieve a 5% mortgage with some lenders. But your broker is going to be able to advise you what's the right one for you. Because just because you can get a 5% deposit mortgage, it doesn't mean you should. Trust me, the more deposit you put down, your future self will save. Thank you for it, because you will save thousands in interest. Number two, your loan to value will dictate your interest rates and your mortgage payments. And the reason for that is each lender will have a bracket, and that was dictated by the loan to value. So, for example, you might be in the 90 to 95% bracket. That means you're going to have the highest rates on the market. The other end is nothing to 60%, so a 40% mortgage deposit, and that means you're going to get the lowest rates on the market, and therefore the lower the monthly payments. The more deposit you put down, the more competitive the rates will be. Number three, each lender will have their own criteria around the loan to value. So just because one lender is saying you're self-employed, you need a 15% deposit, doesn't mean all lenders will say that. You have to look at the lender's criteria and what you're looking to achieve and match you, your credit file and your monthly payments to that lender. And the best person to do that will be your mortgage broker. Get a copy of your credit file to them so they can review it and match you correctly. So to recap, the three things that really impact on your loan to value is one, your credit file. The poorer the credit file, the more the deposit is required and therefore the lower the loan to value. Number two, your interest rates on your monthly payment are dictated by your loan to value. And number three, each lender is going to have different criteria around what they expect in a loan to value bracket. So make sure you get matched to the right one. Understanding your maximum loan to value is crucial to making the process smoother, quicker, and less stressful. It's really important you know what you need to be able to achieve that mortgage. So ask your broker what is the minimum deposit amount or the minimum percentage you need to put down. If you don't have a broker, drop me a comment below and we can have a chat and let you know what that would be.